Today we will have a look on the cash flow of the DeLonghi for the latest period. The cash flow for the period timeline accounted for about 480 million euros, thus closing the cash and cash equivalents position in the balance sheet with more than 1,250 million euros. So, by breaking down the cash flow, we can see that the cash flow generated by the current operations was positive and accounted 446 million euros. In 2023, the profit pertaining to the group accounted for 250 million euros, and it is recovering from the previous drop in 2022 with a careful strategy of selective price increases to mitigate the impact of cost inflation and an increased efforts on the advertising and promotions. Amortization and depreciation amounted to 108.2 million euros, which is higher than in the prior year due to the completion of a few investments made in the second part of 2022. In 2023, DeLonghi generated a net working capital cash flow of 138 million euros, a strong indicator of liquidity, and the company significantly reduced its operating net working capital from 450 million to 61.1 million euros, representing just 2% of total revenues. DeLonghi took extraordinary steps to lower inventory levels by almost 265 million since 2021, cutting warehousing costs and inefficiencies, and generated 34.6 million euros. Trade receivables were kept low at 2.4 million due to faster collections and factoring without recourse, reflecting minimized credit risk and financial costs. Conversely, trade payables rose to 186.9 million euros, driven by increased purchases and longer payments period to suppliers. These improvements in working capital management resulted in a cash conversion cycle of 3.41 in 2023, enhancing the company's efficiency and reducing the reliance on external financing for daily operations. The positive operating cash flow margin shows that the DeLonghi Group is able to convert sales to cash with a high profitability and earnings quality. Now, the group has three strategic involvement of the use of cash. First, capital expenditure of the expansion of production capacity and increase of efficiency. Second, mergers and acquisitions to leverage the company to pursue external growth. Third, dividends for the remuneration of its shareholders. In 2023, the company's cash flow absorbed by investment activities accounted 92.2 million. DeLonghi is pursuing a sustainable growth globally through M&As. For example, in 2020-2021, the company acquired Capital Brands for 420 million euros and the remaining 60% stake of Everseas for 110 million euros. Furthermore, they purchased a new plant in Romania for 156.2 million euros. In 2023, the main investments were 18.7 million euros for the development of new products and patents, 66.7 million for enhancing production facilities by expanding the production capacity in Romania and China. The cash flow from net equity and financing activities was 12.2 million euros. The primary objective of the group is to maintain a solid credit rating and adequate capital ratios to support its business and maximize value for shareholders. In 2023, the group distributed dividends for a total amount of 72.4 million euros, which is 40% of the net profit of 177 million in 2022. DeLonghi distributes on average 40% of the net income to its shareholders, which are very important for the group. And lastly, no new loans were taken out in 2023. The positive value of about 93 million euros in the repayment of loans and value of other net changes in sources finance indicates that the company secured more cash from financing activities than is spent on loan repayments, resulting in a net increase in cash. About our final considerations, we can point out that the group had an excellent performance over 2023, mainly due to a strong cash generation of almost 450 million euros thanks to operations, effective working capital management, and supported by a net profit of 250.4 million euros. DeLonghi has consistently generated positive cash flows over the years, enabling the group to pay dividends of 72.4 million in 2023, complete strategic acquisitions, and make significant investments in expanding production capacity in Romania and China, and in the development of new products. DeLonghi is well positioned to leverage its operational strengths and solid financial base for future growth. The group's ongoing investments in strategic acquisitions and production efficiency provide a robust foundation for addressing future market challenges and capitalizing on opportunities. That concludes our presentation. Thank you for your attention.